Good evening and welcome to the Daily Market Update. The benchmark DSEX returned to negative territory, dropping 138.56 points, 2.47% to close at 5,462. Meanwhile, market turnover declined by 18.13% from the previous session to 7.76 billion Bangladeshi takas. Islami Bank, Pubali Bank and Brak Bank from the banking sector, Beximco Pharmaceuticals and Square Pharmaceuticals from the pharmaceutical sector, and Walton High Tech from the industrial sector mainly dragged the market down today. In terms of sector-wise return, almost all the sectors posted a loss today, in which the NBFI sector posted the highest loss of 3.18% and industrial sector registered the second highest loss of 3.16% today. 6 textile and 3 insurance companies were among the top 20 losers today. Prime Finance and Investment, National Bank and Shankpakor Ceramics registered the highest gain, while Bangladesh Welding Electrodes, Popular Life First Mutual and BD Thai Food and Beverage were the top losers today. There was no disclosed price-sensitive information for these stocks. The trading volume of ICB Islamic Bank, Jute Spinners and Aziz Pipes increased significantly today compared to the average trading volume of the last 3 months. There is no publicly disclosed material reason for the volume increase of these stocks. Today's top 2 news: Bangladesh's private sector credit growth plunged to an all-time low of 6.03% in January, as prolonged political instability and a high interest rate environment forced businesses to shelve expansion plans and pushed banks into a highly cautious lending stance. The central bank attributed the slowdown to tight monetary conditions, rising government borrowing to finance the budget deficit, and subdued loan demand amid ongoing uncertainty over new investment decisions. The sharp deceleration signals a pause in entrepreneurial momentum, highlighting the urgent need for stability and confidence to reignite private sector growth. Bangladesh's economic growth slowed for a third consecutive year in FY 2024-25, easing to 3.49%, the weakest performance since the immediate recovery from the COVID-19 pandemic. Economists described the deceleration as largely inevitable, pointing to falling investment, contractionary monetary policy, and weakening domestic demand as key constraints on growth. The slowdown marks a sobering moment for the economy, but also a pivotal opportunity to reset policies and rebuild momentum toward a more resilient and sustainable growth path. That's all for today. Thank you.